AMC stock, the $3.00 gamma squeeze is here, shorts trapped. Welcome back to Smart Stock Sam, the channel where we cut through the noise and give you real, data-driven analysis you can actually trade. I am your host, Sam, and today I need to ask you a very serious question. What are the chances that one of the most beaten down, written off, laughed at stocks on Wall Street would quietly double in price in a single month, shatter every resistance level in its path, get silently loaded up by institutional giants like BlackRock and Renaissance Technologies, and be sitting right at the doorstep of a mechanical gamma squeeze toward $3, all while the financial media was busy looking the other way? Pretty much zero, right? And yet, that is exactly what has happened with AMC Entertainment. Today, AMC is sitting at $2.83, up over 107% in a single month. And if you watched this channel last week, you saw every single step of this coming. The Gamma Squeeze blueprint we laid out on June 13th mapped this move almost to the penny. The prediction came true. The $3 magnet is now live. And right now, I am going to show you exactly why this is happening, what the smart money is silently doing behind the scenes, and precisely where this stock goes from here. Stay locked in, because this is not a coincidence, and it is not meme magic. This is a surgically calculated, mechanically driven market event, and you deserve to understand every moving piece of it. But before we go forward, let us go back and look at the blueprint that predicted all of this. Because validation is everything in this game. A week ago, I told you that the ultimate buy zone for this trade was going to sit right between $2.20 and $2.25. And what did the market do? It dropped to exactly $2.20 on Tuesday, held that level with absolute precision, and violently rejected it, confirming it as an iron floor. I then identified two major resistance walls at $2.41 and $2.50. Over the last 48 hours, buyers did not just knock on those walls, they completely demolished them on historic volume. When a stock follows a technical blueprint this precisely, it tells you the algorithms and institutions are controlling the tape with clear intent. Their destination is $3. This is what disciplined, data-driven analysis looks like in real time, and the best part is, we are not done yet. The most explosive chapter of this move may still be directly in front of us. Now it is easy to look at a 107% one-month gain and assume all the fuel is burned. But if you peek under the hood at the technical dashboard, the picture tells a completely different story. Right now, AMC is flashing 12 active strong buy signals simultaneously. Let me break down the most important ones for you. First, we have the Relative Strength Index, sitting at 65.72. Now here is why that number matters so much. It is firmly in bullish territory, yet it sits safely below the 70 level that flags a stock as overbought. That means buyers are not exhausted. There is meaningful runway left on this run before the technical picture overheats. Next, look at the moving average stack. AMC has successfully reclaimed every single major moving average. The current price of $2.83 sits above the 5-day, the 20-day, the 50-day, and perhaps most critically, the 200-day moving average, which sits down at $1.80. That is what traders call a golden stack, and it is a textbook signal of a structurally healthy uptrend, not a desperate pump. Add a confirmed MACD bullish crossover and a beta of 2.22, and you have a stock literally engineered for extreme, amplified upside volatility. Every indicator is pointed in the same direction. Now here is something crucial that most retail traders completely miss. Indicators do not move stock prices. Volume moves stock prices. And what happened over the last 48 hours in AMC is something you simply do not see in normal markets. On Wednesday, June 17th, AMC blasted clean through the $2.50 structural ceiling on a staggering 68.8 million shares of volume. That alone was a signal. But Thursday is what truly cemented the story. Volume surged even higher to 81.4 million shares. To put that in real perspective, that is more than double the stock's 50-day average daily volume. Now, here is the single most important thing to understand about this breakout. Notice how that $2.50 level spent months acting as a brick ceiling holding this stock down? Because the price broke through it on such massive, sustained volume, that former ceiling has now completely flipped into a concrete support floor. Buyers are actively and aggressively defending that level right now. That structural flip is not a minor detail. It is the foundation of the entire next leg of this trade. But here's the question you should be asking right now. What is it that makes $2.50 so significant? And to really answer that, we need to step away from the stock chart entirely and look inside the hidden engine that is mechanically driving this entire rally. The options chain. This is where it gets fascinating. AMC is currently caught in a textbook mechanical gamma squeeze. Here is exactly how the machine works. Retail traders and institutions have been aggressively accumulating call options on AMC. Right now, there are over 65,000 open call contracts sitting at the $2 strike, and another 29,000 at the $2.50 strike. Because the stock price has already surged past both of those levels, these contracts are now in the money. This triggers a critical chain reaction. Market makers, the massive financial institutions on the other side of those options trades, are now legally required to actively buy millions of shares of AMC stock on the open market to hedge their own risk exposure. It is an automated, self-reinforcing, mechanical buying loop. They have no choice. And right now, the ultimate upside magnet drawing all of this mechanical buying pressure upward is the $3 strike, which is sitting on an absolutely staggering 46,664 open call contracts. As AMC's price inches closer to $3, market makers will be forced to buy even more shares to stay hedged. Think of it as a gravitational pull. The price is being dragged upward by a mechanism that does not care about sentiment, news cycles, or emotion. It is pure, cold math, and the math points to $3. Now, there is a second sleeping giant hiding in this setup, and if it wakes up, it could be the most explosive accelerant of all. Let us talk about the short sellers. Right now, there are 59.08 million shares of AMC sold short, representing over 8.5% of the entire float. Even more striking, an incredible 24% of that short volume is happening off-exchange in dark pools, suggesting these players are trying very hard not to be seen. Now, here is where it gets almost absurd. Typically, when a stock runs up 100%, short sellers start panicking. They start covering. But look at the borrow fee rate right now. It is sitting at a microscopic 0.41%. That means it costs short sellers practically nothing to hold their losing positions, and it has bred total, dangerous complacency. They are not scared. They are asleep at the wheel, comfortable and smug. But here is the scenario that should terrify every short seller in this name. If retail and institutional buying pressure pushes through that $3 gamma magnet we just laid out, this complacency is going to snap violently. Shorts will be trapped above a level they cannot afford to hold, and they will be forced to buy shares at any price, just to exit their positions. That forced buying cascade on top of the gamma squeeze mechanical buying would create a move that, frankly, most people will not believe is possible until they see it on their screen. Now, here is where the narrative gets really compelling, because every great squeeze still needs a real business underneath it to sustain the move. So what is actually happening inside AMC's theaters right now? Fundamentally, the company is experiencing a legitimate operational turnaround, and that is not a phrase I use lightly. In May alone, AMC welcomed 25.5 million global guests through their doors. That is the highest attended May the company has seen since 2019, before the entire world shut down, and the momentum is accelerating heading into summer. Toy Story 5 is hitting theaters right now for Juneteenth weekend, projected to open to a massive $160 to $175 million. But beyond box office receipts, AMC is fundamentally rethinking how they generate revenue. They are rolling out high-margin, feature-fare premium food menus across over 400 locations, moving into high-margin licensed merchandise like the viral Buzz Lightyear popcorn buckets that have been all over social media, and launching their new Arena One initiative, simulcasting live concerts from artists directly into their theaters. Paris Hilton's concert event was one of the early pilots, and the response was extraordinary. AMC is no longer just selling movie tickets. They are selling experiences, and experiences command premium margins. Zoom out to the macro picture, and the broader economic environment is suddenly shifting in AMC's favor. Easing inflation and softening oil prices mean the average American consumer has more discretionary cash on a Friday night, and that translates directly to more footsteps through AMC's doors. CEO Adam Aron also publicly backed the massive Paramount-Warner-Skydance merger, and here is why that matters. This mega merger contractually guarantees at least 30 theatrical releases per year and enforces a strict 45-day exclusivity window before anything goes to streaming. The studios have finally accepted what the industry tried to deny: they need the theatrical box office to survive. The theatrical window is being reinforced at the highest level, and AMC sits right at the center of that ecosystem. Now, here is the event from last week that the bears were certain would destroy this rally, and instead, it delivered the single most important proof of conviction we have seen. On June 11th, AMC executed a $150 million at-the-market equity offering, dropping approximately 105.3 million brand-new shares directly into the market. Think about what that normally means. That level of sudden dilution absolutely crushes momentum. The supply shock alone should have sent the price spiraling, but the exact opposite happened. Retail and institutional demand was so overwhelmingly intense that the market swallowed those new shares whole, and the stock actually continued to rally. The market absorbed a $150 million dilution event, and the stock went up. That is not coincidence. That is a statement of deep, serious conviction from the buyers in this trade. And if you want to know what is truly happening behind the curtain, you follow the smart money. Let us start at the very top of the company. CEO Adam Aron personally bought 250,000 shares of AMC on the open market at $1.38, bringing his total personal stake to over 2.4 million shares. When a CEO injects his own cash into his own stock, that is the loudest possible insider signal. Not a press release, not a tweet, actual money on the line. But look at the broader institutional picture. Yes, Vanguard recently exited a significant 30 million share position. The bears latched onto that headline. But look who stepped in to absorb every one of those shares. Triumph Capital Management increased their stake by 139%. Royal Bank of Canada boosted holdings by 90%. Renaissance Technologies and BlackRock added meaningful new positions. The smart money is not fleeing AMC, it is rotating aggressively into it. Wall Street analysts are notoriously late to every party, but they are finally being forced to face the tape. You still have bearish outliers like Citigroup sitting at a $1.20 price target, a target that is already far below where the stock is trading today. But the rest of the street is rapidly catching up. Benchmark and B. Riley have already upgraded AMC to a buy rating. Wedbush currently holds an outperform rating with a $3 price target. The overall street average has now drifted up to $3.12, with the most bullish analysts pointing to a street high target of $4.50. When the conservative Wall Street consensus starts aligning with the mechanical gamma squeeze targets we have been tracking for weeks, you know that a meaningful repricing event is already well underway. Now I need to give you the full, honest picture, because that is what this channel does. As traders, we have to separate momentum from marriage. Despite the bullish catalysts piling up, despite AMC swinging to a positive EBITDA improvement of $38 million in the first quarter, the company still posted a negative free cash flow of $174.7 million in that same period. And AMC is sitting on over $4 billion in corporate debt. When you add theater lease obligations to that number, total liabilities exceed $7.3 billion. I am telling you this directly because you need to understand the full picture. AMC right now is a highly charged momentum vehicle, not a Warren Buffett fundamental hold. Long-term survival absolutely requires aggressive debt restructuring. We are here to trade the squeeze with clear eyes and disciplined risk management, not to fall in love with a ticker symbol. So here is your precise actionable trade setup going into the week of June 22nd. Our directional bias is strictly long for a bullish breakout continuation. If you are looking for an entry on a pullback, your optimal zone sits right between $2.65 and $2.75. Buying healthy consolidation safely above our options floor. If you are a more aggressive momentum trader, look for a confirmed high-volume break above the $2.90 recent high as your entry signal. Your immediate and rock-solid support level remains that $2.50 options wall, backed up by secondary support at the 50-day moving average sitting at $2.39. Your hard stop loss sits just below $2 flat. If AMC closes a daily candle below that psychological floor, the thesis is broken and you exit without hesitation. Capital preservation is always rule number one. If the trade works in your favor, here is how you take profits in stages. Our base target is the $3 to $3.12 window, driven by the gamma magnet and the street average consensus. If buyers obliterate that ceiling, we move to the stretch target of $3.33 to $3.60, which brings us back to the 52-week high territory. And if the short sellers finally capitulate and we trigger a full-blown forced covering cascade on top of the gamma squeeze, the maximum upside target becomes a violent push toward the Wall Street high of $4.50. That is the scenario where 0.41% borrow fee complacency meets a mechanical buying wall they simply cannot escape. As we head into next week, here are the 3 catalysts you must have on your watch list. First, watch Toy Story 5's opening weekend box office. If it shatters that $175 million projection, expect an immediate pop. Second, watch the options volume at the $3 strike in real time. If open interest keeps building there, market makers will be forced to accelerate their hedging buys. Third, and most importantly, watch whether that $2.50 floor holds on any intraday dips. That level is the heartbeat of this entire trade. If it holds, the bulls are in control. AMC has made a quiet and remarkable transition from a distressed asset fighting for its survival to a heavily weaponized momentum vehicle backed by a genuine operational turnaround, an expanding gamma ramp, and a short base drowning in its own complacency. The path of least resistance, as long as volume stays steady and our levels hold, is aggressively upward. Before I wrap up, I want to be straightforward with you, because that transparency is the foundation of everything we build here at Smart Stock Sam. Nothing in this video is financial advice. I am not a licensed financial advisor. Everything discussed here is purely for educational and informational purposes only. AMC is an extremely volatile, high-risk security. You can lose money, including your entire position, very quickly. Always do your own independent research. Consult with a qualified financial professional before making any investment decisions, and never trade with money you cannot afford to lose completely. Trade responsibly, manage your size, and let the data guide you, not the hype. Now here is my question for you in the comments below, and I genuinely want to know what you think. Is $3 just the beginning for AMC? Or do you think the short sellers still have one more trick up their sleeve before the real squeeze ignites? Drop your honest analysis below. Some of the sharpest insights on this channel come straight from this community, and I read every single one. If this video added value to your trading, hit that like button right now. It is the single biggest thing you can do to help this channel reach more people who need real, data-driven analysis. And if you are not subscribed yet, what are you waiting for? Hit subscribe and ring that notification bell so you never miss a blueprint like the one that just played out on AMC. If this breakdown genuinely helped you, consider sending a super thanks through YouTube's support feature. Every single one goes directly back into making this content sharper, deeper, and more valuable for you. And finally, I have launched the Smart Stock Sam exclusive membership community right here on YouTube. And if you are serious about leveling up your investing and trading, this is where you need to be. Members get early access to trade setups and direct access to me for deeper discussion on plays exactly like this one. The link is right below. Come join us and let us build real wealth together. I will see you in the next one.